Hey,
Chameleon. Thanks for joining us today, everybody. Hey, D, how you doing?
pretty good. How are you doing, Will?
Great.
I know
Hey,
you-
everybody. Thanks for coming to today's show. As you can see, I'm still in my living room. Power is not on. I was telling Dmitry, I was filling up my generator this morning. I went with the less expensive version, so I have to put gas in. Always a problem. Spills on your feet.
Oh,
I'm smelling a little bit like gas this morning. Let's get started, everyone. We're live on YouTube. I will put out a link if your screen is having some issues and it's a little fuzzy. You can come into our Zoom webinar. Remember to like us and subscribe. That's always helpful. I forget to say that sometimes. We've got a lot of chit chat going on, D, but before we get going, why don't we do the disclaimer? What do you think?
yep. Let's go. And again, thanks everybody for joining us today. Really quickly, we're just going to put up the disclaimer. What this is saying is Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need a professional, then seek a registered investment advisor or call your broker. They'll explain to you or give you recommendations or advice. There's the disclaimer, everyone. Thanks.
Awesome.
So let me.
All right, I just put the link out on YouTube Live for the Zoom meeting if you are seeing a fuzzy screen. All right, let's get going, buddy.
Okay. So, and one thing you did mention, Will, I think that's coming up is that unemployment. I know some of those numbers
came out this morning. It came out this morning, right? And it was actually better than less unemployed people, which is always a good thing. But
okay,
what the commentary is behind me is that maybe with this number coming in better than expected, they will have a real hard time passing a stimulus package. So,
really?
So okay. Who knows? Who knows?
I think there's another one coming out Friday. I'm not sure if there's one Friday coming out.
Yeah, no, I think today was the ADT, so it's like a pre number.
Right.
Yeah, multiple numbers.
Right. So they're still negotiating that stimulus plan, but I think that'll be, big deal to our economy. But let's just kind of hop in and see what's going on today in the morning. As usual, we're going to start with what's trading in the pre-market hours. It's the pre-market report. It's looking at the most actively traded stocks in the pre-market, the biggest percentage gainers, biggest percentage decliners. And I go right to the middle and the top of the list, the biggest percent gainers. And what we're seeing here is a couple of these small cap stocks. They're usually the ones that pop up top. When you see very big gains, I see one here, AVCT. Looks like there's some news on it, some kind of buyout. I don't know. I didn't really read the news, but I just see it's a 38.4 million market cap stock, up 113%. ADXT, this one, news related to COVID. And again, we've been seeing that a lot lately. Almost on daily, we see something with COVID, and those stocks tend to pop right in the morning, and we see really big percentage gainers. Before I open it up and just look at it from a price action perspective, historical price action perspective, I'm going to just turn to these ETFs real quick to see what's popping up in today. Again, silver, the ETF, that's up 4.2%. We've been mentioning that for a while now since Chris did that webinar with us.
For anyone who doesn't know, we did a webinar on Monday evening with Chris Marcus, Mr. Silver, who has a very interesting perspective on the silver market. I'll put a link in the YouTube chat. It's definitely worth a watch.
Right. And he was making a bullish case for silver. And I think that's the second time we had him on, or third time.
Yeah.
So we've been seeing that, and that's kind of the inflation-driven type of trade that's going on in the silver. But I think that in the pre-market up 4.2% on 3.3 million shares. And that's also, I think, a new 52-week high for the silver ETF. Let's just come back here and see which one was I talking about here. Let's look ADTX. Again, this is a small cap stock. We see that stock popping 75% in the pre-market hours. Here's the 52-week range, 283,708. So right near that 52-week high. That closed at 393. yesterday. Here we see the range in the pre-market as low as $3.93, as high as $10.40. Very liquid, very wide range. It's kind of trading all over the place. That traded 3 million shares so far in the pre-market compared to 3 million float in the stock. Will, were you saying something? I've heard like a background.
No, that was just a little reverb.
Okay. Here I'm just looking really quickly at the VWAP bar that's the longest one, sticks out the most. Those that traded between $7.76 to $8.12 on 646,000 shares. That's a really quick price action analysis in the morning. Here are the news coming out this morning. I'll let you, the trader, kind of read that and interpret that. Let's take a look at historically what the stock did when it gapped up in the morning at the opening, and what the stock tended to do after the open. So I'm going to go here to the gap up history table, and this is taking the last 3 years, the biggest gap moves to the upside, and we're looking at the 12 biggest gap moves. On average, we see here that they averaged 4.5%, so nothing like we've seen today, 75%, very big. When it tended to gap up, let's see what it did post open. So from the open to the high of the day, the average gain was 6%. From the open to the low of the day, the average has been down 8.8%. From that open to the close, it looks like 50-50. Half the time it was up, half the time it was lower, for an average loss of 1.8%. Again, there's news on it today. It's up a lot. We haven't seen such a big move to the upside historically as this 75%. And keep in mind, this is very liquid stock. You can see that range here in the morning. It's traded as high as 1040 today. It's already 689. So careful out there with these stocks, but I know a lot of people like those small cap stocks, and especially when they see volatility and big moves to the upside. Here coming out after a big gap move, we just see it's kind of mixed 50-50. Half the time it was up, half the time it was down the next day. This is 2 days, 3 days, 1 week, and 2 weeks later. But that on average, it saw some gains in share price. So that's a really quick analysis of this top one over here, ADTX. Let me take a look at real quickly what's reported earnings, anything moving on earnings. So here we got TVTY, APPS. Let me just take a look at higher market cap stocks if we had anything. So only a few that are over 20 billion. We see here BMY, that's up 3.2% on 309,000 shares at the opening. We have 3 that are down: CNQ, HLT, W, Wafer down 1.1%. Again, these are that reported earnings and market cap over 20 billion. That's what I just really quickly filtered out. Since we're already on here, let me just take a look at BMY. It's up 3.1% in the morning right now on 309,000 shares. Let's look historically what it did after reporting earnings. So these are the last 12 quarters. So we see here that 45% of the time it got higher, 45% it was lower, then the rest it was unchanged over here. We see an average move of 0.3% to the upside at the open. After the opening, from the open to the high, the average move was 2.3%. From the opening to the low, average move was 2.6%, kind of even there. 64% of the time by the close of the day, from the open to the close, it was higher. 36% of the time it was lower, but the average loss was 0.3%. So you see, had over here a pretty big decline here, even though it opened up 3.1%. From that opening price, by the end of the day, it was down 6.8%. Coming out next day after earnings, 64% of the day was 64% of the time was lower, 36% higher, average loss negative 0.2%. But as time went on, 2 days, 3 days, 1 week, you see that that stock firmed up. 1 week it was up 73% of the time for an average gain of 1.7%. 2 weeks later, 82% of the time it was higher, 2.9 for an average of 2.9% gain. So that's a really quick price action analysis on BMY earnings. Of course, you could go in there and do that on any stock that you want, or if you want to do just your watch list, just select it from down here and see what's moving in your watch list. I'm going to go right now, Will, unless there's questions on that pre-market movers. Maybe we'll look at upcoming earnings and then do maybe a couple option strategies.
Sounds good, D.
Okay, so let's take a look at earnings that are upcoming next 2 weeks. So I'm gonna scan these for stocks that on average have trade at least 10,000 option contracts or more on a average daily volume. Let me just come over here. And that's because we want to just look at these from the perspective of what are the options implying or expecting the earnings move to be versus like historical average moves. So remember, we're looking at an option straddle, buying a call, buying a put at the money. We're using that as what the expected or implied earnings move is, and then we're going to compare that to what historically that's those stocks move. So up here, this is PENN. That's the first one here. That's expected report actually already today before the market opens. Is that right? So that's expecting 9.8% move versus an average of 4-quarter average move of 7% and a 12-quarter move average move of 5.5%. High move in the last 12 quarters was 15.4%. Another one, let me just see. I'm going to go to ones that are expecting maybe higher moves here. AMC, that's today after the close. That's expecting 11.1% move. That compares to a historical 4-quarter average move of 3.3% in absolute terms and a 12-quarter average move of 5%. So we see that 7.8% over the 4-quarter average, 6.1% over the 12-quarter average. High move there was 14%. Zillow, we mentioned that yesterday. That's expecting today after market close. The expected move as of yesterday's close was 11.9%. That compares to a 4-quarter average actual move of 13.4% and a 12-quarter average actual move of 11.9%. So you can see a little bit under the last 4 quarters, right at where the last 12 quarters move was the average, and we see a high move of 26.9% in the last 12 quarters. Let's take a look now. I know that PENN here, we talked about, that's in the like resorts and casino, right? Let me just. So let's just look at that real quick and see how those fared, because I know that industry has been impacted, pretty hard from the coronavirus. So I'm going to come here to the summary here. Since I filtered out resorts and casinos, average daily volume of over 10,000. Let's see in the last 2 weeks what happened. So here's in the last 2 weeks. These are the 2 stocks that reported in that same category. So we see Wynn, MGM. This is what they did. Wynn was down 2% after reporting earnings. MGM was down 3.3%. We see, that's what this is saying. There's 2 that reported, 100% of them had a negative impact of an average of down 2.2% at the open, average loss of negative 2.7% by the end of the day. Here's what the straddles did. Both straddles, look to me, if you bought the straddles, they were both losers for an average loss of 54%. So this is these are small sample. Obviously, there's only 2 of them. One thing I did notice, though, that I think this one, PENN, for whatever reason, has been outperforming the other stocks within that industry. Here, let's just take a look real quick.
You always have to be careful and dig into the company. And we have Jake on YouTube, so he may know. but Penn may be heavily involved in online gambling. So
Exactly.
I
Yes.
don't know that for a fact. I don't know anything about Penn, but other than
No,
casino stock. But
you always have to take a look, because keep in mind, that all these are starting points and data that you're feeding into your analysis, right? So there's no one particular information. You're just gathering information and painting yourself a picture. But this is what I did notice, because this is Penn and other stocks in that resorts and casino. But if you look, a lot of them did not do well. See, the majority of them were down, but Penn in the last 6 months look up 16%, up 104% on the year. So this one actually stood out from the rest of the group. It wasn't doing like, here's Wynn down 45% in the same period. So we see here right now, I don't know if it already reported up 1.7%. Again, like Jake was saying, and Will, you always want to then dig down into that company and see, what's going on in that company, because that could change your analysis and your perspective on what's going on. And what did Jake say? He said that Penn's more involved in the online.
He did not. He's just set up a warning. Be aware. Not all casino resort stocks are the same. Some maybe have a bigger online presence, and just be aware.
Yeah, exactly. They could have a different model, business model that makes them perform even better than some people that are kind of just grouped in with them. So that's Penn. That's analysis on Penn. Let me come back to, let's see if there's any other interesting ones here coming up in the next 2 weeks that we could take a look at. I'm just going to take these off. Let's just come back and look at all of them here. So let's see, you want to take a look at Zillow, unless anybody's putting symbols in there that.
Yeah, no, Zillow's a good one to look at.
All right, so let's take a look at Zillow. That's today after the market close. Let's see what's been
it really is. It's interesting. Zillow's doing some pretty interesting things in the space, from actually trying to buy homes in front of people to they have a whole platform that allows landlords to manage their rental properties.
So Zillow is like kind of in a lot of different businesses. And actually, did you know how their business model works? Like how they make money?
Not exactly, no.
No. So the way, so it's an app, right, that you could go and search for homes, and they have a bunch of filters and ways to screen, similar kind of like we have a lot of screeners. They do the same thing, but that's all free. So the end user doesn't pay for it. So the people who pay for it are actually the realtors who pay for leads, right? So when somebody goes in there and looks and finds a house, right, Zillow will recommend, here's the contact, for this house, make an appointment. Well, those realtors actually pay a lot of money for those leads. So that's how that app makes money. Or part of it, they have I think they have other ways, like you said, to make money, but
they're trying other things.
They're trying other things, other ways of doing it. But I think that's the core of where their revenue is coming from. Anyway, here's Zillow. That's near its 52-week high. They're doing okay, pretty good in this environment. If we look at the last 12 quarters, this is what it looked like. These bars over here, that was the implied move heading into earnings. The green ones, that was the actual move to the upside. Red bars here, that's the actual move to the downside. So you see the one I'm hovering over, that actual move was down 15.3% versus an expected up or down move of 12.8%, according to the option straddle. Here it blew through to the upside, to the downside. So here are the stats here in the last 12 quarters. 50% of the time, that straddle was overestimated the move, 50% of the time it underestimated, so 50-50. The average of the implied moves from the options was up or down 10.8% in either direction. the average of the actual moves was 11.9% in absolute terms, right? So the moves on average exceeded the implied moves according to the option straddle by about 1.1% differential. Let's take a look real quickly at the implied volatility and what that tended to do. So this is looking at the implied volatility of Zillow on a 30-day constant maturity. Keep in mind, it's not the near-term month, it's 30 trading days out. So it's looking at a month that 30 trading days out. So on average, the implied volatility from the day before earnings to the day after got crushed 27%, declined by on average 27%. On average, the day before earnings, implied volatility was 63.3. Day after earnings, the average volatility is 45.4. 5 days later, the average was 43.3. So kind of declined a little bit more 5 days later. This is here. These are the last 12 quarters, the stats, from 5 days before to 5 days after. So here we are right now, as of yesterday, 72.2 implied volatility. On average, the average is 61.6 with a high of 93.6, low 40.4. So that's where we stood as of yesterday's close in that 30-day IV. So that's a really quick one with Zillow.
We had a Jen, actually, who's been on every time we've done a show, but she's actually a realtor as well. So options must be her side gig, but she says she pays $3,200 a month for leads. I don't know.
There you to
high or
like
low.
Zillow.
Yeah, for Zillow.
Yeah. So you see, that's how they make their money. They make their money off generating leads to realtors, and realtors are really the ones who are supporting it and paying those fees. Obviously, it's free to the end user. So there you go. I think Zillow, Realtor.com, they all have a similar model, because I was always wondering, how these free apps, so they have to get their money somewhere, and they don't.
And I'm sure every market's different. Zillow knows just how to price it to where.
Oh yeah, like I'm sure, like Beverly Hills, it's probably like
maybe 32,000 or 300.
Yeah, it could be like 32,000, right? And so it really probably ranges based on like zip code. But that's really cool. And look, Zillow's up, almost, you would think, in this environment, the housing market is doing pretty good, right? They opened it up. People are buying houses, mortgage rates are really low. So that's one place that surprisingly is like pretty robust right now.
Yeah, well, it is amazing because the spring is usually the big home selling season, and it was basically shut down in America this spring. But once the market just showed a crack and opened up a little bit, I mean, it was like and listen, we're in the New York metropolitan area. It seemed like a rush to get out of Manhattan.
Yeah, that's what I'm hearing. People in Manhattan are just miserable, and they're trying to get out and actually like moving towards the suburbs, either buying homes or like renting homes for a year. And so if you're like near that Manhattan area, that is interesting to see, like that people are just desperate to get out, especially if you're in a small apartment there with nothing to do because everything's closed.
Yeah. The great thing about Manhattan was that you could get out and do things, walk around and do things, and that's not existing right now.
Yeah, exactly. So you're paying New York prices, but you're not getting New York
amenities.
Yeah. Let's take a look. I was going to, let's just take a look at SPY really quickly. And that's, almost near that 52-week high. We're not that far away. Let's take a look at, let's take a look at maybe a bull put spread.
Awesome.
Now, of course, I'm not telling you to do it. I'm just picking one. You could do a bear call spread, bull put spread. This is just kind of like just to show a demonstration of what you could do. And this is if you have a bullish to moderately bullish outlook, or you think it's going to kind of like sit here. So here I see a bull spread. Now, a lot of popular ones people go to, these are credit put spreads. A lot of popular ones are the credit put spreads that are out of the money, so I tend to get a lot of questions about those, show me out of the money put spreads. The idea behind it is that an out of the money put spread, if the stock goes up, you can make money. If the stock just sits there, you will make money. And if the stock declines a little bit, you could still make money as long as it doesn't like crash through your strikes. So here's one that pops up on that bull spread as a recommendation. This is September 4th, selling the 323 put, buying the 318 put. Here we see a market price right now is 93 cents. We think theoretically it's worth 52 cents. That gives us a 10% edge with a historical win rate of 90%. So I'm just going to hit on that to go to the options chain, and we'll just take a look what that looks like in a payout diagram. So here it just kind of populated, since I hit it, it populated those legs for us. Selling the September 323 put, buying the September 4th 318 put. I'm going to run that strategy so it draws us a payout diagram. This is what it looks like. So you could see here, the stock is right here where this line is. So if you're collecting 93 cents, stock sits here, that you'll profit. If it goes higher anywhere from there, again, you'll keep that credit. You see, even if it goes from this line lower a little bit, this is where you kind of start losing right here around that 323 mark. It breaks that strike. And of course, if it crashes out, you're stopped out, but you'll lose anywhere below that. So that's how a credit put spread looks like. And real quickly, I just drew a diagram here because I've been getting questions on credit put spreads more often, either credit call spreads, people who are feeling a little bit bearish, credit put spreads, people who are feeling like bullish or feel like the market's going to stay here for a while, maybe even until like elections, so we might not see a big downturn until elections. Of course, news could come out at any time. But that's a quick, overview of a credit put spread.
We have a question about a biotech, which has earnings after the close. CLVS, Clovis.
CLVS, this one? Okay. It was related to earnings?
Well, that's one of the things I see is it's got earnings. They're just asking in general, Clovis. I think it's also got, like a lot of the biotechs out there has some COVID things going on. I mean, there's a series of binary events probably sitting on this one.
Okay. Well, let's just take a look since it has earnings coming out today after market close, let's just take a look at that real quick. Let me see what the stock tended to do going into earnings. So I'm going to just click on that stock patterns over here.
I mean, if you go to the company events too, people can look at that. There are a bunch of events populating in there, which,
could impact the stock as well.
Yeah.
So here's at least from a historical perspective, the stock tended to gap down more often than up for an average loss of negative 1.6%. That's after reporting earnings. We did have some. Let me just see the absolute average gap move was 6.5%. From the open to the high, we see the average move was 6%. From the open to the low, the average move was negative 6.4%. So again, it's volatile, right? It has a lot of volatility in it. From the open to the close, it was down more often than higher. 58% of the time it was lower, 42% higher for an average loss of negative 1.9%. See here, the gap move here on average up or down was 6.5%, but the total move by the end of the day on average was 10.6%, which is telling me that whatever the gap was, it tended to stretch even further. So not close the gap, but the stock that move tended to accelerate or amplify after the fact, because these are looking at absolute average moves. Remember, moves, you convert them all to positive, because in options, we were looking at volatility, not direction. Here, it really just shows that you're better off historically waiting for the stock to report, because on average the next day it was up 75% of the time for an average gain of 6%. 2 days later, on average it was up 58% of the time for average gain of 5.1%, and so on. So really that next day was from a bullish standpoint historically was better than like getting right into the earnings. But we'll see. Like you said, we don't know what they're going to say if they have something with Corona or whatever. We've seen these things move a lot, right? Like every morning we've seen very big movers on that type of news, and the stock is not that big of a market cap, 463 million shares. 463 million market cap in the stock. So that's CLVS. Really quickly, from a historical stock perspective, I'm going to take a look. Here's how it did compare to the options. So if we compare it to what the options were expecting, then this CLVS, it overestimated the move 92% of the time. The average implied move heading into earnings was 15.5%. That compares to an actual average move of 10.6% in the stock. So see here, 5% differential. Look, it's a small cap stock though, and it could anytime it could have a violent move. So maybe that's justified.
Yeah, no,
small cap biotech stock.
Yeah, no, it's interesting because we do, and thanks for joining us, everyone. We have a lot of people who like trade in these penny stocks coming into the chat, and Jake's actually asking them, why are you looking at these penny stocks? Why not just look at some options to trade? It's an interesting conversation going on in the chat.
Right, because what people are trying to do is, risk $1, $2 to make whatever 50 cents, but you could do that in Amazon options, right, or Apple options.
Yeah, you just
something with more certainty.
Yeah, you just look at every day they're binary events in the options where you can, if that's what you want to do, you can go do that. They're inexpensive options that you can.
In big name stock, even like SPY.
Yeah, and once you start digging in, you'll find out. Well, there's some great credit spreads to do, some bullish spreads. There are lots of interesting things which are,
Yeah, and you could structure in a way where at least statistically the odds could be in your favor, right? So that's the difference. These penny stocks, you don't know enough about them, but yeah. So that's interesting. We're almost out of time, Will. So I could take like one last question, or we'll save it till tomorrow.
Yeah, we can save it till tomorrow.
Okay.
Everyone, thanks for joining us. Another great day, a great pre-market show. Thanks everyone for coming into the chat. Always a big, interesting discussion. Jen, who's out in Boise, has been a big follower of the show, and she was very active today.
Thank you, Jen. We really appreciate it.
Yeah, just an interesting note. She says people are coming from Seattle and LA and California, getting out of the cities, which you wonder how long this is going to go on. It's really interesting.
We're seeing that trend, people moving out of the cities into the suburbs.
Yeah, it's I don't know if it's a long-term trend or just a short-term interesting thing that's going on. But listen, make sure you like us on YouTube, give us a thumbs up if you can, and subscribe to the show. Dima, great show. Thank you very much. Any parting words for the chameleons out there?
No, I think maybe we'll mention, we're planning to do a webinar Monday, and we're thinking maybe, so I'm on deck. I think we don't have a guest on Monday, and we're thinking, Will and I were discussing it, of doing like very basic options, like just talk about what is a call, what is a put, because I think we haven't done that. We've always just assumed people are coming in from intermediate or advanced levels, but we do have some people who are just getting into it. So that's what we're thinking. We'll see how it goes. I don't know what you guys think, but let's just go from the basics. You know, what is a call? What is a put? We'll talk about, you know, the strike price, what, you know, what the theta means, the decay, what the leverage is, maybe go through an example. So
we're going to start from the first page in Nattenberg and work all.
yeah. Yeah. So hopefully that will be helpful to a lot of people who are just kind of starting out and thinking about, you know, what is an option.
I love it.
To learn. Yeah. Not jump in, but to learn.
Yeah. And listen, anything you want us to talk about, you know, always send an email to support@MarketChameleon.com or put it in the chat here, and we will try to get to it.
Yeah. All right.
Awesome.
Thank you, everybody. Have a great trading day.
Have a great day, D. Have a safe trading day, everyone. Join us for tomorrow's show. Have a safe trading day. Bye.
Bye, everyone.